Hello, my dear family and friends. I'm happy and excited to start this new series of videos on what I call swing trade to financial freedom. And this is our first video. I'm going to discuss how to set up a really good trading platform. But before we do that, please take a moment and read this legal notice and know that what we discuss here is for educational purposes only. And please know that investing and trading has risk as well as reward with it. And if you're new, I want you to know that most new people lose money. And so please paper trade. And if you ever want to decide to trade live, please do it with a small amount of money that you can actually afford to lose. And if you have any questions, please do consult your registered investment advisor and also CPA or attorney for tax and legal advice. And so let's begin. Um, we going to talk about downloading and working with ThinkorSwim-Platform. It's a great platform by TD Ameritrade. I am in no way associated with them. It's just I like their software. And what's nice about it is that you can get all the feeds you need, depends on what you want to look at in terms of charts, for free. So if you want to trade, like say, or look at stock charts, then you have the feeds for that. And if you want to trade or look at the charts of uh, exchange traded funds, you can also have that. By the way, exchange traded funds are, for example, Standard 500. There are 500 major American companies. They have about 40% exposure to international markets. And if you have mutual funds in your investments, they're probably trying to compete with one of these exchange traded funds and do better, and they do charge you fees, of course. But also, most of them don't even do as well as the exchanges themselves do. These exchanges, like the Standard 500, you can actually trade them through the market open, whereas with mutual funds, you cannot. With mutual funds, you have to place an order after the market closes, or if you place it during the day, they don't do anything with it till next morning, and then it goes into effect. And so it's really nice to be able to look at the ETFs, and that way, if you want to keep your mutual funds, then you can also see the mutual fund that you have is competing. They have a they tell you what they're competing with, and so you can look at that particular fund and see how your mutual funds are doing. So we're going to discuss that a lot. Also, there are options on stocks and ETF. Stocks ETFs can be expensive, over $1,000 a share sometimes. But with options, you have the right to trade that underlying stock or ETF, and you can purchase them at the really fraction of the cost. So we'll discuss that in the future videos as well. Now, futures are also important to look at, especially futures for Standard 500 and other indices like Dow. Because they're open 24 hours a day. Well, actually, they open 23 hours a day. They open at 6 p.m. each night, and they close at 5 p.m. And they close on Friday night at 6 and open again on Sunday. Uh, at 6 o'clock, they close on Friday at 5 and open on Sunday at 6. And there are also futures, options on futures as well. Now, some people like to trade Forex. Forex is great because both Forex and futures are open 24 hours a day. And but what's nice with Forex is that when you're ready to paper trade, after you paper trade, you want to go with live money, which is a good exercise. Because once you go with live money, then you can see how emotions come up very quickly, And that's how most people trade, unfortunately, out of emotions, not out of planning or not understanding the charts. But with Forex, you can start with a very small amount of money. The smallest increment change in Forex is called pip, and it could be as small as 10 cents. Of course, you can have it $1 or $10 a pip, but for beginners who want to try live, then Forex is great because you can trade the one at 10 cents a pip. Now, if you only want to trade Forex, you may want to look at Ninja Trader. It's a great platform for futures and Forex, and especially for demo trading, it's really fantastic. But here we're going to discuss, ThinkorSwim. But if you have any questions on a Ninja Trader, you can contact them directly. Or if you have a question with ThinkorSwim, you can also contact them. They're all really great support. And also, you feel free to write me if you like. If you have any questions on this video or future videos, I have normally a online live webinars on Sundays nights, 8 to 9 p.m. Eastern Time, and I'll be happy to discuss your questions as well. So let's go ahead and look at the ThinkorSwim for a few moments. And, we're going to go ahead on Google, for example. So here's Google. And then in the search engine, you can put down ThinkorSwim, and you see it comes as all connected as one word. And you click on that, and here it is, right up here, ThinkorSwim. And then you see right here, this is a trading platform, but we do not want to use this one. This is for a live account. And so what you want to do is roll this down to where you see paper trading. So if you roll this down slowly, we're going to see here it says practice with paper money, and that's what we want. So if you right click on that, register now, then it's going to ask you, do you have an existing TD Ameritrade account? And so if this is your first time downloading ThinkorSwim, just say no. And then it opens up here, asks you some questions, and asks you to set up your password and username. And please write that down so you have it in the future as well. And then once this is done, you can download it, and then you'll see an icon just like this here. It says ThinkorSwim on it. So if you double click on it, it asks you to let it open up. You say yes. So you'll see it's installing updates. So it may take a few seconds for it to complete. And then once it opens up here, you put your username and password. Now, what's important here, down here it says live trading. You click on paper money, and you should get this type of a color here, like gold, because this is a paper account, your demo account. You're setting up, so you cannot use the live account. So then you go ahead and put your username and password here and log in. Okay, so it started opening up for you. Now, it's going to open up and give you a certain page that may not look like mine here. I've already created this here. So what you want to do, go up here where it says charts, and you click on that, and then you click on the chart and opens up one page for you here. Then I'm going to show how to set this up. I like to have 3 pages, as you can see. And this one on this side here, it says 20-year monthly. This one here, it says 1 year weekly. And here it says 3 months daily. So what it means is that you see these bars on here, they're red or green. These are called candlestick, Japanese candlesticks bars. You see that here? And we're going to use that. Now, Some people use different bars, and that's quite all right, but we like Japanese candlesticks. And if you want to see different style, for example, here is a style here, and then you come on this side, you can see here it says chart type candle. In here, for example, it says bar. This is more Western style type of bar. You can change it to a line, for example. So again, here we go to chart type and put line. Now you can see a line here. We're going to go back to Japanese candlesticks. And so our style here, we're going to be candle. And these, by the way, were designed by Japanese rice traders about 400 years ago, and they became very successful trading with them. And the way these candles come together, they sort of a certain patterns and that we're going to discuss in future videos that really helps to see what's happening with the marketplace. Now, for now, if you see there are red and there are greens candles. And so for right now, if you see a green one, where that body starts, that's where that bar started. Now this is a weekly, 1 year weekly. That means each bar is 1 week. So for this week, particular week here, started here, closed here. But you can see also has what's called the wick or shadow. And that means throughout that week, market went this low and went this high, but then it closed at this point here, whereas opened here. And if it's red, it's just the opposite. So here, for example, we have a red open there, closed here, and you see it has a small wick here. And also you can see sometimes there are small candles, sometimes there are big candles, sometimes they have a big wick, sometimes they have a little wick. All these are what's going to help us to get a better feel for what's happening in the marketplace here. Now, up here, you can put the symbol you like. Now, I have SPY, that's SPY. That's stands for 500, actually a tenth of it. And this what can be traded. Now, if you want to put down, let's say, Apple, if you know the symbol for any stocks, you can just put down AAPL. And here, we're going to have Apple. Now, as you can see also, we have up here, this, it says one red, here it says one red, here says one red, they're all the same, and that's how it populates all through stocks the same way. Now, if you have different colors, then you can have different symbols if you wanted to. Now, on this side here, see there's a little arrow here. If I open that, here I can create different, different lists of stocks if I wanted to. And excuse me. And so here I have a whole setup of them, for example, and I can also make this bigger. Now here see I have, for example, T. This is AT&T. Also here, as you can see, it says one red, and here's SPY again. Change it. Here's Microsoft. Here's Neiman. Here's Pepsi Cola. So you can also create a chart, and to do that, it's very simple. You just go where this list is. You click on it. You see down here it says create a watch list, and so here you give it a name. Let's say we call this class, and then you're going to start adding symbols to it. Let's say we want to put Apple here. Let's say we want to put McDonald. Let's say we're going to put SPY for Standard 500, or Dow, DOW for Dow 30. Let's say we put QQQ. This is NASDAQ 100. And let's say put IAWM. This is Russell 2000. And so you can put as many stocks you like here, and then it says save. And so you have it right here. And like I say, if you make this one red, then all these are connected together. And so you can have them. Now, once we have your chart, let me show you how you can have more than one chart here. See here on the right corner upper, I have 3 little boxes there. So if you only have one, here's only one. See that? Now, if you want to have 2, you just put the next one. Now you have 2. If you want 3, you put the third one. Okay, so now we have 3. Now, on the first one here, let's say, we make sure we have this candlesticks here, not line or something else. Then you can go ahead and save these styles. In the future, you'll see we're going to put some indicators on it. But for right now, we're going to just have it without any indicators. It's really good to be able to look at the chart and get a sense for it just by looking at it without any indicators. And I'll show you how we do that. And so if you say style and save, he says save style. And so here I have class no indicators, for example. And then you include patterns and study sets, so you save that. Now, if I come on the middle one and I put this red again, you see now I have a different settings over here, so I don't want to use that. I'm going to use the one I just saved. So I right click, I go to style down here, and I go load style, and I save class no indicators right here. There we go. Now we have it. And we're going to do the same thing here. And I'm going to again load this. This is class no indicators. Here we are. Now, once you have that, you can actually save this whole page, this whole 3 charts as one. And the way you do that, you click on this corner little thing here, and you're going to save grid as, and you give it a name. So let's call this class DWM, so daily, weekly, monthly, and we save that. Now, the other thing you want to do is to create your time frames. Now here, of course, I had my time frame, so I could set this up, but here you can see a D for day. If you click on that, and you see you have some time frames already set up here, but you can say customize, and see I have like 20-year monthly, I have 1 year weekly. Here's an example: 5-year daily, 1 year daily, 3 months daily. I also have shorter time frames. So if you want to add time frames, you just go here. It says add time frame, and then if it's here on the time interval, you can go. Let's say we're going to go 15-year here. Here we're going to make it weekly, and so we say add. So now we have 15-year weekly. So I can also move this up if I want to keep it in order. Or if you already have one, you want to change it, you click on it, say edit, and then the same thing, you can make changes. This is daily. Now the intraday, you can do shorter time frames, but for right now, let's just stay with daily. And so here, for example, we're going to go, let's say 10 years, and we're going to go daily and add. So now we have that. It's up there. So we're going to move it down. Here, we got now 10-year daily, and we say okay. All right. So now we have this set up. Now, let's go back and put SPY here. All right, this is Platfor 500. Like I said, this is the biggest. By the way, here it says 3 months daily because we saved 3 months daily, so we need to go here and change it to 20-year monthly. So now we have, as you can see here, 20-year going back each bar 1 month. And if you go left here, you'll see up here where my mouse is, you can see that this was back in 2000. Market actually dropped, as you can see, till 2003, from here to here, almost 50%. You see that here, it was up there, then he came down here. That's almost 50% drop in 2003. This was 2000. Then he went up. This is like around 2008. Again, dropped by 2009, almost 50%. And then he came back up again around 2013. Basically the same level it was 13 years ago. Now, why am I pointing this out? Because market does this. Market goes up and down, up and down. On average, if you look back, market drops around 40%. roughly every 5 years or so. But then if you have money invested in a marketplace like in your mutual funds, and you go talk to your financial advisor, or you listen to the gurus on the news, MSNBC and places like that, they're going to tell you, oh, just hang in there, it's going to go back up. But then look at here, if you had listened to them and you were in this position 13 years ago, you literally made zero at this time. But what happens is that when the market drops, you get your statements every quarter, 10, 20, 30, 40, 50%. At some point, a lot of people just can't take it anymore, and they give up. And of course, if they don't give up and don't exit, they have to wait a long time. Nobody knows how long it's going to take till it goes back up again before they even break even. Uh, and especially if you're an older person, you need this money for your retirement income. And then you're taking money when the market is going down. So that's why it's so important to understand how the financial markets work, and it's really not that difficult. I'm going to be discussing this in the next videos, but I do hope this shows you that why you should be the one who looks at the charts, and even if you have money in a group plan or you have financial advisors, so-called managing your finances, you want to be able to see what's going on, if that person is doing a good job for you or not. And just like anything else, like your health, if a doctor gives you a diagnosis that you don't agree with, you're going to get a second opinion. Or you study about it and know yourself, and then you can see, hey, if this is a good diagnosis or not. And so that's why it's so important to see how the financial markets work. And we're going to talk about Platfor 500 a lot and use it because it's the biggest market there is. And for that matter, 75% of all the stocks move with Platfor 500. That is what's called the market. So, today, for example, if you look at here, market is up 16 cents right now. So you can see what's going on. And of course, this is monthly. We can go on the weekly and daily with a smaller time frame. So here we can go back to restore sell. In the middle, now again, this is our monthly. We're going to make it 1 year weekly. And then, of course, on the daily, we have that. So if I open up the daily, this is for the last 3 months, you can see how market has been going up this last 3 months or so. You can see here, and we're going to learn to put like trend lines on these, see what's going on. And you see how even this 3 months market goes up and down, up and down. Now here we had a really red day on Friday. Today, market is, I can see a small body here. It hasn't really moved so much. It's only moved like 7 cents right now. And also we can look at a future. This is Platfor 500 ETFs, but especially we can also look at the futures, which would be /ES for Platfor 500. Now this way you can also look over at night. Like the market's open 20 hours a day, and if you look at night, if you listen to news in the morning, financial news, they say, oh, the markets were down or up at night. And especially if you look at them yourself, if the market is down, the chances are during the day market also will go down. And if it's up, it may go back up during the day as well. So you get a feel for that. And also if you look at different time frames, depends, of course, how long you want to be in a market. So some people like to do short-term trading. Some people like to do swing trading. Some people like to hold on to stock for a long time. So that's important to be able to see what the market is doing. And so in the future, I'm going to show you how we'll find out what the fair market value of a stock or ETF is. We want to see if that particular ETF, like here, it's called E-mini or Platfor 500, or your stock. Let's say you want to look at Amazon. Here we put Amazon, and let's say we're interested in buying Amazon. Is it, by looking at this, can you tell if this is overbought or oversold at fair market value? We're going to show you how to do that. And also we want to discuss when to get in and when to get out. And depending on how much time you have, but even if you're working full-time job, you can easily take, half an hour every night, look at the market, look at the portfolio you have. Or if you're going to start brand new investing, it's really simple. I will discuss this more again in the future. Um, and so whether you want to manage your investments, or you want to start a new investment, or you like to swing trading, that means hold on to a position for a few days or a few weeks or months, or you want to do a short term trading, we're going to discuss that. But mainly I'm going to discuss with you swing trading. That means you hold on to your position, hopefully more than a few days, maybe goes into a few weeks or even months, depending on at what place you get into a market. So then, for now, I think this is enough. I hope you go ahead and install this ThinkorSwim. It's free, doesn't cost you anything, and it's good for 2 months. And after that, you can redo it again, or you can open a live account, put a small amount of money in there, then you have it and you can hold on to it. Now, if you only want to trade Forex, let's look at a Forex here, for example. Let's say we look at Euro/USD. So here, what's nice about Forex is that, like here, we're looking at 20 monthly. Let me open this up for you. You can see here, there's a high point here is marked, high point, and there was a low point here, which is also marked. Okay, and what happens with Forex, they go within this range of high and low because countries don't want to let their rates they get too expensive or too cheap for import export purposes, and so then. In a way, it's easier to be able to see where they're at, whereas like with stocks, they can keep going high and higher and higher and higher, or lower and lower and lower. But here you'll see they're still within this realm. So right now, if you look at this monthly, you can see it's been coming down. Euro against US dollar has been coming down here, and it's kind of going in this pattern. So it's possible when it comes down here, we'll go back up, comes down, go back up to break this one way or the other. And of course, this is on a monthly, and I like to look at monthly to get a view of the overall market in the long term. Then I like to look at the weekly and see what's going on. And so here we can see it's coming down at this point here. And of course, this candle here tells me we had a positive week here. Now, this is the week here. Again, we're going to show you how we analyze more deeply. I just want to give you some ideas here. And then we'll go to daily. And so we're going to maximize this again. And you can see what's going on here. It's been in this range for the last 3 months. And so it's possible it comes down here, we'll go back up again and down again. Now, also, when I do trading, I may look at like a 4 hours. Like here, I can go and open up my 4 hours chart. That means every bar now is 4 hours, and that's really a very nice time frame to look at especially for Forex, and also for stocks as well, so you can get a better idea what's going on here. And so we'll discuss all this for you in the future. But like I said, if you only want to trade Forex, then you may want to look at NinjaTrader. That one is free. You don't have to keep reinstalling it. You don't have to open up a live account, but they allow you to demo trade once you open an account with them. So thank you very much, and I hope I hear from you, and I look forward to making new videos and install them for you. Have a great day. Thank you. Bye.